Okay, let's go ahead and get into the stock market technical analysis. We'll look at the broad markets and we'll see what's going on. So starting this one off, triple Qs rallying, pretty impulsive rally over the last 5 days, obviously. We just started shorting this yesterday is where I started shorting it, down a little bit on those positions. And so we'll look at that. And again, down here, if you guys remember, at least in the private member group, I talked about how it was starting to go long, and I was looking for a long position for a bounce. And we did get that, obviously, gained some profit on that. Just started shorting yesterday. So let's see. Here's what I'm looking at. All right, on the daily chart, you've got resistance right here. This is your downtrend line, resistance. There's another reaction, and we're coming into that downtrend line. So typically, I like to step in early on trades. I understand that, sometimes when you get in early on a trade, you're going to have to ride out some initial losses. That's just the nature of it. But I prefer to get in early rather than be late and chase a trade. Okay, so that's where we're at now. We're coming into that downtrend line, so that is resistance, and that has not been broken. There's no technical change there. Additionally, this downtrend line here, we are in a downtrend. It's obvious, lower lows, lower highs. That has not changed. And so until that changes, we're coming into resistance, and it's objective to short at resistance. Okay, so that's what I see there. One of the reasons why I was looking to short yesterday, if I go over to the FANG stocks, and primarily Apple, you can see here, Apple had rallied yesterday right into resistance. There it is. Resistance, and resistance. So Apple rallied into resistance. It was an objective short on Apple yesterday. Problem is, it was right ahead of earnings, so there's always the potential that earnings is going to foil the chart and it's going to break out. So that is one reason why I didn't want to specifically short Apple and be a little more diversified with triple Qs. But Apple being the major player in the in that index, and it was at resistance. So that was one key reason. And then also, if you'll see here, Google's kind of holding above resistance. We have this gap. There's this gap entry right there. And yesterday, let me zoom in. You can see yesterday we closed right at the gap, right there. Today we're above it slightly, but got an hour to go. The sellers might step in. And again, I think we're at resistance relatively. Typically, when you want to look for a breakout above resistance, you want it to be impulsive. This is not impulsive above this level. Google's up 1%, but from the resistance level, it's really only up about, which is right here, about 120. It's right there at that gap entry. It's up about 0.5%. So, okay, so again, that's at resistance. Microsoft's chart's a little kind of cloudy to me. I do have this longer term trend line, and if I roll out on the daily, this comes all the way back from 2016. I've got reactions there. I've got several through here, but then it started to really chop through it, and it's not really holding as valid of a trend line, but we're pretty much there now at resistance if that trend line is going to hold true. Okay, so that's kind of the major thing that I'm looking at. And then if I go back to, let's look at the semiconductors. So on SOXX, you can see if I extend this trend line out that I've had, just extend it out somewhere right in there. Again, at resistance, all right? So that's the thing. We've had an impulsive rally over the last couple of days, but we're rallying now into the downtrend line that's been in place for over a month. A couple months actually. So that's it. Now maybe we break out, but until we see that breakout, we trade it as resistance, looking for a pullback. One thing that I do want to point out though, T and X, this is our 10-year interest rates, because obviously treasuries are rallying. This is the bigger picture. If I look at like the weekly chart and I roll out to, this is your COVID lows right here. All right, and we've had several tags of that. We're pretty much right there at support with no breakdown, all right? So again, if we break down and we start to see interest rates falling more, then that's going to mean that we're likely going to have falling interest rates, which should be bearish for the market, but initially probably going to be bullish because the market is just looking for cheap and easy money. So you might see that initial drop in interest rates might be bullish for stocks. And we have negative divergence on the weekly chart. All right, this is a divergent high, so I think we're probably going to see interest rates continuing to fall, although we have not broke that support yet. So, and it's likely not going to happen today. So I think there's probably one more little reflexive bounce. Let's go to the daily chart. I think you're, right there. My trend line might be off slightly, but we're basically right there at support. Not really impulsively breaking down. So I think you could get maybe one more bounce up to about there and then break. And if that happens, if you see rates tick up and you get a little bounce here, you're probably going to see stocks pull back. Okay. And again, stocks, tech especially, is at major resistance. So things to look at. If I look at the IWM, I wanted to point this out as a trade idea the other day. I just didn't quite pull the trigger. But on the daily chart, you'll see here, we are at support. All right. There was some support. And then recently we traded right down to it. Undercut it slightly, but pretty much at support. And we didn't have the bullish divergence on the PPO. We had it there on the RSI, but not on the PPO. So wasn't something I was in love with, but it held. And obviously, impulsive buying from that point. IWM is pretty heavy in the financials, and financials are very rate sensitive. All right. So the rate sensitive stocks, because we've seen a pullback in rates, we're seeing the rate sensitive stocks rally. And let's look at home builders. These are kind of an example. Here's PHM. This one we've been out of for a while. We shorted this thing at the sell signal here, covered it as it came close to hitting that 200-day moving average, and we haven't been in it since. It also built bullish divergence, so there was no reason to remain short. Now we're spiking up. I think we're so close. I think it's probable we're going to go put in a new divergent high, pop up and put in that new divergent high. So nothing I like on this one, at least as of today, but you can see the interest rate sensitive stocks are really impulsively ripping high. Oh, one thing I did want to point out, it is kind of interesting to me. If I go to triple Qs, if I go to the hourly chart and you see this, we're really overbought in the short term. All right, here's the RSI down here. Now, typically anything over 70 is overbought, but typically what you want to do is look at what's the past history of this specific instrument. And triple Qs, if I roll out on the hourly chart and really start to look at, where are areas where it's been the most overbought, and I can see one right here. Back in February of 2023, we were sitting at about 80. Well, we were sitting there at about 86.40, and that was right there at the peak right there. And then we did have a correction. That correction was about an 8% drop. Now, if I go and look at where we're at right now, we're at 89, 88 and a half. So we're the most overbought in the very short term, just on the hourly chart, not on the daily, but just on the hourly. We are the most overbought that we've been in many years, ultimately. You can see here, we are just extremely, extremely overbought. So we haven't been this overbought in many years, which tells me that, we're going to have a pullback. All right. I think it's very probable. I can't say without a doubt we're not going to break this trend line. All right. If that happens, okay, maybe that, we'll keep an eye on that. But I don't think it's going to be a straight shot. All right. So I think it's very probable we get a pullback around current levels. Probably pull back to this 362 area as support. So I'd look for that. Maybe even come down and fill some of these gaps. Gap to fill right there at 357. I think that's a very probable trade given the fact that we're so overbought and we're at kind of major resistance in the triple Qs. A little more upside to go. We're not completely at major resistance, so there's a little more upside. But ultimately, risk reward tells me, it's favorable to, if you're long, to probably start exiting longs. And, if you're short, which I'm short, I'm not going to add to my shorts. I'm just looking to capture the trade for that pullback trade. Okay, so as interest rates have fallen, we're also seeing the dollar break down from some support today. So here's the dollar futures. We've got some support right around in this area. It's not the cleanest level, but I'd say it's right about there. You got several reactions, and then if I zoom in, you can see it held support many, 3 tags of that. Popped up here, you can see we made a divergent high. All right, so we popped up, that's a divergent high, negative divergence, and then it's been selling. We're breaking that support today. With an hour to go, the buyers would need to step in. Maybe that'll happen, but if you see it close, then we're probably going to go a little lower in the dollar, down to the 200-day at a minimum. And to me, and there's also support right there in the area. It's right about here, right in there, roughly. It's about the 200-day simple moving average, 103-ish. So maybe a little more upside in stocks, potentially, a little more upside in stocks. And so keep an eye on that. And then gold is another thing. If the dollar's falling, gold should be rallying. We're seeing, the miners are rallying very strongly today. In the private member group, I pointed out this one yesterday, AG. It had earnings yesterday, and it tanked on earnings. It was down quite a bit, but it was falling right to key support. You can see here, this is what I pointed out in the private member group. So if you're interested in that, feel free to sign up. And then you can see there, boom, fell right to support. We undercut it a little, but ultimately that just seemed like momentum carrying it below, and it was going to snap back. And sure enough, up 10.5% today. So yeah, it's in a downtrend, but it was at major support. So okay, so that's that reflexive bounce. Now at this point, if you didn't buy it down at support, I think it probably makes sense just to, at least what I'm doing. I've taken profit on it, and I'm just going to, not re-enter this one for the time being. It could obviously rally to the top of the channel. Okay, that's completely possible. But going into a Friday after a 10.5% or so rally, I think it makes sense to take profit. And you can see here's the gold miners GDX. This one, you've got this downward channel and starting to have some bullish divergence there. That's bullish divergence on the PPO. I don't have it there on the RSI though. So no divergence there. Breakout, kind of chopping around. Nice impulsive rally today. So I think there's probably a little more upside in these. And, we could obviously rally up to the next level of resistance, which, as far as I can tell, decent resistance up there at 33.33. So it's not a horrible looking chart. It's not the cleanest, but it's not horrible. I think there's probably some more upside in that one. And then when I see certain things like this one, MTA, this one's got kind of a downtrend line. This trend line here I was watching. Now, again, I don't own this. I'm not going to buy it. It's not the cleanest chart, but big impulsive recovery of what looked to be broken support. So that to me looks like a bear trap down here, and you got bullish divergence right there on the daily as well. So that looks like a bear trap with a nice recovery. To me, that tells me, boom, up here to about 389. And it's just stuff like that. I'm kind of scanning these gold mining stocks, and I see stuff like that. It tells me that gold does, in the short term, look bullish. Newmont Mining, this is the largest miner. Oh, it's starting to break out actually. This one, you've got a bullish falling wedge. Okay, little brief undercut, but that undercut again was likely going to be a false breakdown because we had bullish divergence. You always want to look for that, and we did have that there, and it's basically there on the RSI as well. So they recovered it right up to resistance, rejected, down to support, back up to resistance, back down to support, back up to resistance, and starting to break out, it looks like today. So I might take a position in this. We've got an hour to go. Again, I like this one because of a couple things. One, the bullish falling wedge pattern, the bullish divergence that's been building, and yeah, again, starting to break out. And if interest rates in the dollar is going to fall a little bit, this should be net bullish for this stock. So ultimately, the widest part of the wedge is the measured target, and that would be right here. You take that from the point of the breakout, and let's say that's today. That sends this thing all the way up to there, which is about 49.75 would be the measured target. So yeah, we'll see how this closes the day and if it really wants to break out or not. Wheat, this one continues to grind around, but it continues to have a bullish setup, so I still like it. I still think it's constructive. And again, sometimes you just have to have patience for trades to actually play out. This one, bullish falling wedge, big bullish falling wedge pattern. All right, big bullish divergence that had been building. Breakout, hit resistance, hit support. Right to the 200-day and a double top, which is resistance. Come back down to support, and we're just basing right now. We continue to base. So this looks like an objective area to buy or accumulate this wheat commodity. And again, I'm looking for a sizable rally. This one, the measured target, you take the widest part of the wedge, which is really about right there. And that sets us up for, and the initial point of the breakout is here. That sets us up for a move to about $8.93, $9, possibly up to about $9.50. Okay, so nice sizable rally if we get it. No, no guarantees, but still looks bullish, still looks constructive. I'm still long this. And in fact, I added a little bit today because of the dollar. With the dollar falling and breaking support, dollar going down takes more dollars to buy wheat, which means wheat price should go up. All right, so in general, that was one of the reasons why I just added a little bit more. Okay, DraftKings. So this one I did talk about. I was short this one yesterday. Small position because, again, I knew earnings was coming out. Never makes sense to be completely loaded up on a position ahead of earnings. That's just a lot. There's a lot of risk there. It's elevated. So to mitigate that risk, and I told one person that, told a subscriber, to mitigate the risk, I was going to be short because the chart looked like it was going to come down, but in case they went against me, I didn't want to get completely murdered. So small position. I stopped out this morning and with a loss, and thank goodness it wasn't that large of a position. So you win some, you lose some. The AG thing was up 8, 9, 10% depending on where you got that one. This one's up 15%. Again, stopping out this morning after it started to hold the breakout. So ultimately looking at, there's about a 5 to 7% loss on that one. This one did just put in a divergent high right here, but again, I think there's probably maybe a little more upside. Okay, you've got, if I roll out, there's some resistance right here at about 35.47. Some decent resistance right up there. So no position on this one as of right now. There's no reason. I don't see any divergences on the shorter time frames, which tells me we could continue to carry a little bit higher. Okay, MasterCard, MA. I put out a chart to the private member group yesterday on this one, and here's what, I had two arrows. I had an arrow potentially right here at the 200-day heading down to support, and I had another arrow right up here at resistance, about basically where we're at right now, heading down to support. So that's it. We're at resistance. You can see support, support, support. There's some more reactions, and there's a couple more, and we're right there again at resistance. So this is resistance. It should have a pullback at this level. Maybe it's going to go higher, but not without a pullback. So looking for that and a pullback to, right now, I'll pull back to the 200. I think because they've overtaken the 200, the buyers are going to be there again at the 200, try to defend that. And that would be at about 381, 382-ish. Is likely where you're going to see some buyers. But I think there's good probability we get that pullback. It's about 1.5% or so down. And then we'll see. All right, you break back below the 200, that's going to be pretty bearish. So if we get that, we'll react. Until then, I think the buyers will be sitting there at the 200 trying to defend it. Okay, that's really all I have. So I'm going to go ahead and get the video out, and we'll do a live stream tomorrow. Okay, thanks.